All right, hello everyone. So trading problems, part number 7. So welcome to the mini series. If you haven't watched the previous ones, I urge you to do so. Problem number 7, trading problems. Let's take a look at what it is. Okay, now also just a slight quick reminder, I'm always looking to solve the problem from time and price trading perspective. So I'm not going to be solving it from any other perspective that you might have on YouTube, because here I have a specific way of trading, which is time and price correlation. Okay, so how time and price correlation can solve all the problems traders have. Part 7, psychological biases. Now here, the first thing is, there are 3 things here, I think anyway. Loss aversion. Traders tend to prefer avoiding losses over acquiring equivalent gains, which can result in holding on to losing trades too long. So how can we solve this problem? Well, first of all, if we have time, and if we have a swing day, and if we have a swing hour, which is all pre-calculated, then it's very hard for me to hold on to a losing trade, because if I've made a wrong calculation, my stop should just be taken out. Because if I have a price and a trading hour, and if that price and trading hour doesn't work, then obviously that turnaround is turned into a breakout. So there is no need for me to hold on to a trade. What we normally see in the markets is sometimes the market takes our trade in and then it goes the other way, but we want to hold on to it. Why? Because we think it's going to bounce off at the next level, or it's just sweeping stops, or something or other. Normally we're waiting for the next level for the market to turn. That is a very tricky situation, and you don't want to be doing it unless you know hours. I have been known for trading very rarely without a stop loss, because I knew the next hour coming up where the market could turn, and that was the only consolation, and that's all. If I don't know the trading hour, if I don't know when the next hour is coming, I'm just sitting and hoping. We're not trading in that way. So you've got to have time and price together, and that's going to solve that problem. If you're wrong with time and price, then you're not going to be in that trade. End of story. The second thing is a confirmation bias. Now, you might be focusing on information that supports your current view of the market, ignoring contradictory data. This also ties in with other people's biases. Sometimes traders give too much weight to other people's decisions or opinions and so on. So on YouTube, you'll find thousands and thousands, millions of opinions about the market. But nobody's going to be telling you a swing day or a trading hour or a price in advance. Okay, nobody likes to do it. If you're watching Bloomberg, I don't know, any kind of news network, finance channel, whatever, who's going to give you a swing day, a swing hour with a pricing in advance? Nobody really does, because nobody wants to take the risk. So there's no proper calculation. Whatever is going on in the world, everybody's got their own opinion. And one more thing we should know from the laws of nature: just like our faces are different, our opinions are different, the way we see things are different. So how should you be trading? Well, with time and price, you only need to trade in one way: what you see. And that's the only way to trade, because if you keep following other people's opinions, then you're going to make a lot of mistakes, jumping from one opinion to another opinion, and that's a completely silly way to trade. Nobody knows what's going on, and nobody is going to know what's going on unless you pre-calculated it. So knowing the swing days and the swing hours is already giving you a heads up as to when the market can turn, or how far we're going to. Just like in the examples that I show. For example, sometimes you see me saying the market should go to this hour if it finds a direction. What does that tell you? It means I can wait until that hour, and that should also match some kind of a technical analysis price we have, or a management price. What is that? A management price is when we get to a certain level, we want to move stops or take partial profits, or just be aware that this is a tricky situation where the market can reverse, and I am prepared for it. Knowing that in advance is already gold. So let's see if we've got one like that. We had a few of those actually this week. Alright, so here is something you won't find anywhere else on the internet. You've got swing days in advance, as you can see here, and you've got a trade hours all posted in advance, okay, before the week even opened up. Let me see, when did I post this? I posted this on the 22nd of March. So for the full month of April, everybody knew the swing days and the swing hours. So if I have a swing hour, for example, what have I said here? This is Monday, right? So I've given the trading hours, and I also made a comment here. I said market might get to a good level for a turnaround at closing, and Asia might be good to get in if time equals price. Note, be careful as we get closer to 6:15, 7:15, not at 6:15, 7:15. As we get there, we want to be careful. Who gives you that kind of information for the week of 7th, 11th April on the 22nd of March? Okay, so all of these hours I posted before. Sometimes I do adjust comments on the day, okay, on the day before everything happens. Also, look here on Tuesday. What does it say? If turn comes, should carry on to target, which is about 11 to closing. When was that? 7:15, 7:35. So we had a few hours here. So let's take a look at Tuesday. Let's take a look at something, right? This is, what's this? This is SP 500. This is Tuesday. Well, this is Tuesday. Look, the market is turning around, and we've got a swing here coming in at 5:30 to 6:15 and going down to 10:45. Was that 10:45 I had for Tuesday? Let's check it out. To 11 o'clock to closing. All right, so it should be, this is a 15-minute chart. So this is 11 o'clock, and this is your closing here. So once the market finds direction, knowing this information alone is like magic, because if somebody has already calculated that if the market turns around, okay, it should carry on until 11. That's like already a bingo trade. So this is your turn, and this is also 7:15, which I had there. This is 7:15, guys. The market just turning. So once it starts to turn down, this is actually a break point, okay, at that hour, 7:15, right there, 7:15 to 7:35. You can see that's just 20 minutes. It's just one bar, which is right there. Once it falls off, and it turned from a weekly pivot going down into the closing. So you're already covered until closing. And this is how time and price can solve these problems. You don't have to listen to somebody else. You can either learn to calculate it yourself, or you got your technical analysis, okay, and then you can match it to your technical analysis. You don't even have to follow my technical analysis. If you're good with technical analysis, in fact, somebody asked a question about that with email, which I'm going to do a video on, and you can do your own technical analysis and just match the hours. Following people in the media isn't going to help you. We talked about market turns and twists ages ago, right up there. See the red fat line there? This red fat line, as you can see, has got more room to come down. We should come further down actually, okay? But these were highs. And look at all these swing days that we calculated before. Every time these swing days are intra-week swing days, right? So within the week, we're looking for turns, because we're not keeping positions for days and weeks, right? We're like trading within the week, intraday trading, or maybe keeping a position from one swing day to another, or actually adding to our positions if I know the swing days. Now look here, for example, I had a swing days. What are the swing days for? Let's say I've got SP 500 there. So we've got SP 500 Monday, Friday. Okay, so that's your Friday. This is your Monday, right? So Friday, Thursday, Wednesday, Tuesday, Monday. Monday is the low of the week. It's a swing day. Now everybody's talking about going down. And on Wednesday, on Monday, I did say we can look for longs to push up. And it came to that PST level. And if you watch Thursday's video, I did say this is going to be like a sell-off point. And why? Because on Thursday we had a Dow Jones and NASDAQ swing day. So if we're high, we're looking to sell. And SP 500 more often than not will go hand in hand with the other indices. So if I've got Thursday for Dow Jones and NASDAQ, I'm going to think to myself, you know what, Thursday could also be a good sell day, just like Monday was a good buy day for the Dow and the NASDAQ. So knowing the swing days ahead of time, all the way from March 22nd for the week of 7 and 11 April, you're already understanding how far we can come down, what days the market should turn. And if you are short, you damn well better think about getting out of the position, taking profit, moving stops forward, adjusting and managing your position instead of staring at the screen thinking this could go down and down and down even more. Because if it does go down, it's going to wave down. Okay, so Dow Jones, NASDAQ, Thursday. Market sells off where? Right at the PST level, which I talked about in Thursday's video. And that would not have been a surprise. On Thursday, let's take a look at the swing hours on Thursday. Wednesday, this is Thursday. Here, look, this is Thursday. Did I make a comment for Thursday? These are the swing hours. You can see market going down. It's gone down into a trading hour. So once you're down at the trading hour again, this is the New York session happening, you're thinking, uh-oh, let's take a look what I say for Thursday. All right, so you should be on your guard. Look what I said on Thursday. This is the New York session, right? Remember, my hours are UTC plus 3. Okay, UTC plus 3. So on those hours, I've got 5:40, and I've said be careful until 6:40 because it can be sudden and disruptive. Then the next trading hours are 7:25 to 8:20 my time, targeting 10:50. So let's take a look at what happened 5:40 to 6:40. This is 1:55 here because this is pretty much London session, 1:55. You see the market going down. Now look here, market getting all disruptive into 7:20. This is 7:20 and this is 8:15, 7:15. Remember those hours, 7:25, 8:20. So both of those hours are trade hours there, and then the market takes off. Where should it go to if it takes off? It should target 10:50. Let's round it up to 11 o'clock. 11 o'clock is there. So it's pretty much the weekly pivot there, as you can see. So if anybody bought those levels, it's targeting there, and that's like a sign for you to like, okay, if that was a target, let's just get out and call it a day if you bought. Okay, remember on a Thursday the bias is to the downside, so we should have sold. But knowing these swing hours, I'm thinking to myself, wait a minute, the market, including the technical analysis, the market just pretty much closed the gap. Okay, and it's a trading hour. So if I sold, what should I be doing here? I should be getting out. All right, so this is how that can really help solve problems. Do not listen to other people. If you've taken technical analysis, if you've taken some kind of an education about how to evaluate the market, okay, stick with how you were educated, how you see the market, and decide on what you see. Because what you see and what other people see will always be different. This is why the world is always in a chaos, because we see things differently. Okay, and your opinion, I'm telling you, is no worse than anybody's opinion, even if the guy has a PhD in economics and all kinds of jazz. It doesn't matter. If you know how to see the market, if you've been educated, taught in a way that works, and you're sticking to your guns, which is important to do, then you should go with what you see, because only according to what you see can you calculate your risk and can you calculate your potential. Because any Tom, Dick and Harry can say anything. The YouTube's full of them, okay, including myself. Okay, so if you think of everything and everyone included, right, This is why it's very important to, if you're going to trade and if you're serious about trading, it's important to come to a level where you build an opinion as to where you're going to buy, where you're going to go, and how you're going to get out if things go pear-shaped, and if things go in your favor, where you're going to get out. You need to know both places to get out, if things go sour or if things go sweet. Okay, and this is best done with time and price, because you can see how far the market's going to go. And if it goes to a price at a time where they match, and if you've got a trade open, you can say to yourself, this might turn around for me. I'm either going to move stops forward, I'm just going to get out with the profit, call it a day, and we'll go in next time. And you can see here with time and price, your stop losses are very tight. You don't need to put stop losses too far out. Look at this SP 500. If I'm entering a trade in this zone, it should be just above the PST at 5494 or above 5522. But once the market sizzles down here, you can actually bring your stop lower. Why? Because according to the time, the market did fall. If it goes back up again, the only time it can go back is at another trading hour. It might go higher and break out, then you get stopped out, or it might do a stop sweep and then go in your direction. Here it just keep going down into the New York session, where it bounced off after closing some gap, and that would have been okay. If you missed the Asia session, it's not a problem. Why? Because you understand you're selling, so you gotta wait for your next setup in the hours. What can happen in the hours? It's either gonna turn or break. So if it breaks like it did here, you can go in at the breakout. How long are you going to stay in that breakout? One, you got to have a price. Two, if you have a time, you are safe. Because if you don't have a time, this big drop here is saying to you, wow, we got a big drop. We'll probably carry on going down since the trend is also down. But no, it goes up. Why? Because there's a swing hour there. Okay, not to mention it's a technical price at a swing hour. So knowing this information already tells you, listen, I'm going to just close this, call it a day, because I already got into the trade late. You see, that's the range of the trade, and that's doubling on the range. Okay, so if you know technical analysis, you should have been all good. And this is Friday. Look where the market is. The trading hours are all in the middle. We've got the highs here. We got the lows here. There's nothing to trade here because we're all in the middle of nowhere. Okay, Fridays I don't trade, so I didn't do a video. I don't work on Fridays at all. But the hours are still there. Okay, because I post the hours Monday to Friday. So if you wanted to trade, you could always do that too. You can look at anything you want here. You can go into the euro dollar, you know, whatever you like. If we go into the euro dollar here as well, you can see that's the Asia session. That's Wednesday, market falling down. Thursday, market going up. Thursday was a swing day. Market went up. Those were the PST levels we had. So Thursday, this is interesting. Why? Because on Thursday, I was like, well, okay, on the PST, we've got like a breakout on the weekly. Okay, so this is pretty bullish. And I did say we've got room to go. You can see on the PST as well. So it turned out into a breakout. What did I say also? I think I also said selling the highs would be okay because we're in a sell zone. All right. So that swing day, let's take a look at SP5 euro dollar. Swing days. What do we have? We had Tuesday and Thursday, right? Tuesday. That's your Tuesday and that's your Thursday. What happened on a Thursday? Thursday, market breaks out, but look, market comes down. This was pretty bearish. I thought it would go down, so I did say if it goes up you could sell. And what would have happened? Let's see. On Thursday the market came up into a swing hour. Look where the swing hour is. Let me tighten this up a little bit. Okay, the swing hour is after a breakout. You see what the swing hour did? It didn't show signs of reversing, but let me just tighten this up a little bit for that's your high. Remember the 1136, the monthly? The monthly PST broke out. So what does that tell me? And it breaks out at a trading hour. So we have a breakout instead of a turnaround. So the market breaks out. Let's say you sold. let's say you sold. Where would you have sold? Let's say you sold at this hour. You would have sold at this hour because this is as close as it got. Or let's say you sold at this hour. Okay, wherever you sold, let's say you sold at one of these three because they were close to the PST. You would have been stopped out. Let's say you entered here in the middle somewhere, 1198. This is 1198. The high of that is 1240. That is a big stop loss. You wouldn't have entered that unless you entered with a smaller lot size. You wouldn't. What you need to do is when you're trading, your stop losses need to be tight. If it's too far out, not good. Okay, not good at all. Is there room to sell here? There isn't. Why? Because we broke out above the PST. But what did I say? I said if it comes back into the trading hours, you can buy. Was this a trading hour? I don't recall. This is Friday, 9:30 in the morning. Let's see. No. I said we could have a push to 1140. And that's your 1140. A push into 1140. And that's pretty much over. And then it sells off, going just sideways on a Friday. Okay. So on Thursday, if you sold, you would have been stopped out. Yes. If you saw the breakout of the monthly PST at the trading hours, then you would have said, okay, you know what? I'm not going to be in this. If you sold here at the trading hour at the monthly PST, you're also tight stop loss. That's fair enough. You would have also been stopped out here. Okay? But your stop loss would have been much tighter here. Okay, you don't want to be getting somewhere and then selling off far away from the target because you're just going to be taking on more risk. So this is why if time and price match, that's your trading zone. If you're going to trade, then you got to trade with a tight stop loss there. This is why other people's opinions really don't matter. The market isn't following a bunch of people's opinion. It's not even following, the president's opinions either. Why? Because we're just trading what you see. And that's all. If the market is in an upwards motion, and even if I am wrong with it, like with the breakout here, then we have a tight stop loss and you can get stopped out. We're not going to be 100%, that's for sure. Right? For gold, I've measured the swing days accuracy at 82%. Euro dollar is somewhere around 70 to 75, okay, on the swing days. And if you match swing days to swing hour, it's even more accurate, okay, with pricing. So those levels, days, hours are really important. And the same thing with anything. You can look at Bitcoin too. If you're going to trade, Bitcoin was Wednesday swing day. Remember, check out Wednesday's video. I said this day you have to be careful because Tuesday or Wednesday is a swing day. Check out the video and you'll see. If I said if it finds direction, it could go up into Asia. Why? Because Thursday we had Asia 1 a.m., 2 a.m., 3 a.m. Remember that zone, okay? And that's how it is. So on Wednesday, this is what happened. The market didn't go down because I was expecting, because Bitcoin has room to go down. And I did say this has room to come down even further into the 68 zone. It still has. And I did say you don't want to be selling the lows. And I did say Wednesday is a swing day. So if we come to a swing hour on a swing day at the lows, then you're not going to be selling. You want to go the other way. And this is what happened. This is Wednesday. Let's check out the hours for Wednesday. That's 4 o'clock. So the market didn't go down. That's 4 o'clock there. 20 minutes past 4, and then I've got 3 to 3:40. Let's take a look at that. 3 o'clock. 3 o'clock. Look, this is 3 o'clock right here. Okay, that's New York pre-trade session. 3 o'clock. 3:15, 3:30, so 3:40 is going to be on this bar. And look what the market's doing, turning around exactly at the trading hours, going above London and then taking off. Okay, note, keep in mind 5 past 7 to 7:30. I'm not sure if it will turn the market, but if you have a position open, use this time to manage it and see how it reacts. So now I've got 7 o'clock to 7:30. Look at the information there. That's your 7 o'clock. See the big bar going up. 7:30 is already there, another bar closing up, and then the market just takes off. Where to? All the way into the Asia session, that 1 o'clock, 2 o'clock time zone on a Thursday. So already knowing these hours in advance, even if I'm wrong, the stop losses are really tight. If I'm correct, we're going to next hours. So measuring it with time and price, you can see ahead. It's like, pretty much looking at things, looking at the future. All right, so I hope this helps, but this is how you can use time and price. Okay, have a great day.